Well, hello everyone, I'm Dr. Stock and this video is for entertainment purposes only. Today, I'm coming to you talking about 3 stocks. I've covered them all on my channel before, but each one of them I believe has areas of interest for us as maybe current investors or maybe people considering different ideas. I want to report back on the performance of all 3 of them and take a look at where they're at and where I think that they're going. So go ahead and stick around and let's get ready to rock. Welcome back. For those of you who are interested, down in the description, you'll find a link to my Patreon. In that Patreon, you'll find my weekly newsletter, weekly watch list of stocks, also my portfolios, growth, dividend, crypto portfolios, and also over there, you'll find access to my private Discord, which has my community of investors over there. They are passionate, positive, supportive people that are absolutely incredible and are just looking for that next way to increase their financial status in life. And we all support each other in that process. So we'd absolutely love to see you over there. If that sounds interesting to you, come on over and join us. Also down in the description, Moo and Weeble, you can find those links. You can click those referral links by signing up and depositing your money. You get some free stocks. I get free stocks for the referral. Thank you in advance for any support that you show, even if it's just as simple as finding that like button and tapping it. You can do it with your eyes closed. Smash around, have a good time. And then also that subscribe button, and then finally that notification bell to see anytime that my videos come out, you will be notified. So I think that's about all I have for you there. With that said, let's get right on to the stocks. Click a little bit of stocky. There we go, we found it. So this first one that we're looking at is Digital Turbine, and I've been covering this one for a while now and saying that if we find this thing go under 60 again, that it is a time where I would like to buy and I would like to add to my position, and it would be something that we would see a recovery back up over that price. You can go back and watch my videos from the summertime as I was initiating coverage on Digital Turbine, and this one is in the mobile advertising space, and it's one that you can check out. They're always putting in huge growth numbers, and they made some acquisitions which we're just starting to see some of the results of those, and we should see some of the good things coming out of Q3. And like I said, they're just a company that's all about growing, and they are partners with a whole bunch of different businesses, huge businesses throughout the world. Samsung is even on their list, and it's about Android devices. So having those mobile apps on those Android devices, and also allowing companies to use single tap installs, for example. Also, I think smart TVs is in there. There's a lot of different coverage, and it's also the mobile advertising is a growing space as well, and they stand to capture a large portion of that. So with that said, this is one that I really do like. I do have a position in. I have dollar cost averaged over time, and I even was able to add down here when it was back below $50 per share. I think I added in somewhere in the 48s for the last position that I took in Digital Turbine, and I said that it should rally strongly from here, and so far it has rallied strongly from here, so I'm really glad to see that happen. We have this death cross that we see here where the 50 period crosses the 200 period moving averages, and when that had, or leading up to that, we had this big sell-off over a FUD that was never really applicable to Digital Turbine's business in the first place. It was when Google did their change in their Play Store for the file types, and people panicked and thought that this would be something that would affect Digital Turbine's business. Digital Turbine came straight out and said, we've been prepared for this since 2019. This is nothing new. We knew about it for a long time. It's already water under the bridge. We took care of it. And so since that time, we have rallied back up on that news. We broke the 50 period, that's this one that you see swooping down here, and it has recently turned positive, coming back up towards the 200-day simple moving average that we have here, which would be a very bullish sign for us. Now, as far as its price action right now, sitting currently at around 75, 76 for the top of this, that corresponds with these tops that we have over here. We have a little bit of room to this previous peak at around $80 per share, and this is an important value for us to not only reach as far as resistance goes, but also to break through it, because that is going to be something, let me zoom out here, that we can see more as a trend reversal, because so far the highest highs that we've had have been trending downward for a long time, ever since back here when we went almost $103 per share, which is almost its 12-month price target where it's currently pegged at right now. I'll show that in a moment. We had lower high, lower high, lower high so far. However, we have an incredible climb right now. We have some really good volume that kicked this off, and that volume is settling a little bit for us, but we do want to see it break up over that $80 per share. Now, what about the upside that's left in this after this sort of run? Well, if we come over to tip ranks, you can see the price target that we have right now. The average analyst estimate is $101.40. We have Simply Wall Street coming out and saying that fair market value for this is like $156. I don't think that that's the case. I think that's way too bullish. I think it's too much too fast. If we ran up there, I would certainly cash out and wait for that fall. I don't think that that's something I see in the near future. This is one that if we see slow, steady growth over the next 12 months, I think that we're in really good shape. That's a 33, almost 34% upside from its closing price today at about $75.77. So we have a lot of people reporting upside on this. McGuire came out for 3.5 star-ish estimate analyst right here saying that it's about a 21% downside. Usually people who are more bearish relative to its current position believe so because of the competition that's in the mobile advertising space, and they say Digital Turbine just doesn't have it. Well, so far they're putting in the growth metrics to make me think that they have a really good shot at capturing a large part of that market, and we just have to see how those recent acquisitions that they've made really play out for Digital Turbine. All right, let's move on to the next stock. All right, so we're looking at the chart right now for ChargePoint. And when you look at ChargePoint, a way to pay attention to this high point that we've had and the sell-off that took place, the little bit of a rally followed by another sell-off, and the fact that we're just about at the bottom of the support from peak sell-off ever since its highs. This is such a common looking chart across a lot of the growth stocks that I think that we're setting up for a rally through Q4 into Q1 of 2022. So Q4 of 2021 into Q1 of 2022. Hopefully I said all those numbers right. It gets really jumbled when you start throwing all those numbers out all at once. In any case, from here, I think that we're going to see a significant rally and that we do have significant upside. I think if there's any time that options plays are out there, whether we're going to see a big move sometime in the near future, or if we're talking about leap options, for example, these depressed prices that we currently see with ChargePoint, I mean, we could play this any number of ways. Leap options would be one way. There could also be selling puts, and honestly, like peak sell-off, this thing goes for like 19 bucks a share. So right now, anything below $19, I'm going to consider out of the money and not near enough to the money. I think that we're actually going to stay up above 19. So selling those put options, yes, it has to be a cash covered put, and you need to have that cash in your account to cover it at 100 shares a piece. So it does get pretty expensive in that way, and it can tie up some of your money. So I don't know if you would want to put those sort of put options out there. Sometimes people prefer the leap options because it doesn't tie up as much capital, and that can be a much more attractive way to play this. And I think that we're really going to see some significant price action over the next few weeks to few months for ChargePoint, that we start coming up off these lows along with a lot of other popular growth stocks that are out there. So ChargePoint, when we look at ChargePoint right now, there's about a 65% upside from its current price up to about $33.71 per share, and it is the market leader in the EV charging space, and it's one of the reasons I'm bullish on it and have a position in it. All right, here we're looking at NIO, and NIO's the last stock that I have for you today, and you can see the peak we have with the sell-off and then the rally up and then another sell-off, and this kind of looks a lot like what we saw for ChargePoint. So is it tied to EV? Is that why we're seeing it? I think that a lot of it is tied to EV, but if you look at growth stocks outside of EV, there are other ones that have very similar charts to this where that valuation sort of calmed down a little bit and we're not seeing as high of prices. I think that we're going to see that tech and high growth rally come back to us probably before that tapering starts to take place, and also before those interest rates take place. I think right now there are a lot of deals to be had and we want to take advantage of them before those deals are out and before those rates are spiked up. So we're going to have to see if that is something that plays out in the near future. It should be pretty green for us in the meantime. So we'll have to watch if that happens. We'll have to see what the big money does. And when the money does start rotating back to these, we're going to see huge price increases. NIO's actually doing well, hanging out in the mid 30s. And you can see from almost the peak sell-off back here is about $34 per share. Peak sell-off, which was a big sell-off for EV, tech, high growth, you name it. And this was something that really dropped down to low 30. And even through all the China FUD that we've had, it took us from about $55 per share for NIO down to about $35, which is a significant sell-off. But China's not going to let go of their golden child. This is the Tesla competition that's going on right now, and I don't think that the government's going to let go of that anytime soon. I don't think that we're facing the same regulatory fears for NIO as we have for other Chinese companies that are out there. So I think that this is one that's going to hold its support in the mid 30s. And I said before, I wouldn't be surprised to see it drop to the mid 30s. I'd be very surprised to see it drop to the low 30s. And so far, I haven't been very surprised. We were in the mid 30s. We've been there before. That was peak sell. Besides this one dip that we had here around 30, could we see it again? Absolutely. It could definitely happen. I mean, there's a lot of different possibilities that are out there. So if all the FUD that we've got so far from China hasn't pushed NIO down out of the mid 30s, I don't think that we're going to see below the mid 30s anytime soon, especially if we hit those delivery numbers. So delivery record for the month of September and also delivery record for the quarter. And this should be absolutely awesome. We have ongoing continued demand for NIO, and 2022 is also supposed to be an incredible year for EVs, and NIO is absolutely no exception to that. So these are all things to keep in mind and reasons why I continue to be bullish on NIO from where we're currently positioned. I think that we have a lot of really, really good and green and strong days ahead of us for NIO, that it's only a matter of time before we see the 40s again, and then the 50s again, and then before you know it, we'll be back up in that 60s territory as we see NIO expand throughout China and even through Europe. And if they can even breach the United States, like come in and start selling vehicles here as well, I think that they're going to find a market here on domestic soil as well. So let me summarize. Digital Turbine, I think that there's still considerable upside to be had from Digital Turbine. Seeing it go over $80 per share is going to be especially important to us to see that we really have started reversing and that we're starting that march towards that $100 mark. And for those of us who have invested in it and are bullish on it, some people got in a lot earlier than I did and have much more multiples from where I'm at. For me, I found it a little bit later, but I've been very happy with my results, and I'm up with an incredible amount of return so far, an unrealized gain on Digital Turbine. ChargePoint, I think ChargePoint is also going to see a really strong return to us for tech, high growth, EV. I think that we're going to see some great improvement from them over the next 12 months. 2022, like I said before, is supposed to be a very big year for us. And also moving on from there, we'll watch how they build out over time to really expand, having 70% of the market so far for EV charging in the United States. They're one of the clear leaders that we have. So to me, it's one of the best places for EV charging that I can put my money. Moving on from there onto NIO. NIO is one that I think is going to capture that upside. Moving on from where it's at, hitting that mid 60 mark over the next 12 months could be very good for us. I think that we're actually going to have a lot of upward revisions for 2022 into the end of 2022. You know, that we could even see much higher from where we're at right now at that $66 mark if they rotate well out of the chip shortage, if they're able to navigate that and also show strong demand and delivery numbers and keep hitting records and new milestones, then I think we're going to see upward revisions moving us up from that $66 mark. So that's what I have for you guys today for these stocks. Go ahead and check them out, see what you think. Tell me what you think about them down in the comments. I would absolutely love to hear from you guys. Remember the Patreon, if you want to join me over there and meet my community of investors and see what else I have to offer, we'd absolutely love to have you over there. Just got a couple more members, and it's wonderful to see them there, and I can't wait to interact more with them. Moomoo and Weeble, those referral links are down in the description. Go ahead and click those, sign up, deposit your money, and get your free stocks. And thank you for the free stocks. And then finally, nope, there's two more things. One is that like button. Hit it. Subscribe button. You got it. Go ahead and turn that thing gray for me. And then notification bell. Ding, ding, ding. Go ahead and ring that bell so that way you can see anytime that my videos are posted. And finally, the last thing. I'm Dr. Stock. Thanks for rocking with me to go get that money.